Well, hello everyone. My name is Alison Woodall and I'm a relocation specialist. That means I get to help you with the financial, logistical and emotional issues that make moving to a new state so stressful. And today I'm talking to Pamela Witt, and she is a mortgage lender based in Middle Tennessee. Pamela, welcome.
Hi, Allison. How are you? Thank you for having me.
Well, I am so excited to talk to you because I love Tennessee. It's one of my favorite states. But you didn't grow up in Tennessee, did you? Did you grow up in California?
So I grew up in Washington State and then met my lovely husband that was in the Navy. And he actually took us to California for about 18 years.
Wow. So how long
Yeah.
did you live in Washington State for? How old were you when how long did you live there?
23 years.
Okay, well, let's start there because I know that there's a lot of people in these groups who are considering Washington. What did you love about Washington State?
Growing up, I liked it. I never thought I would ever leave. And my husband took me to California, and I always told him I'm never moving away from Washington. We moved away. We actually went to Texas for 3 years and then came back to Washington and ended up in California. So when I left Texas, came back to Washington, it rained the whole 3 months that I was there, maybe a little bit longer. Every day it rained. So I called him up and I said, you need to get me out of this state. I cannot do this. So once we left California, or once we left Washington and then I went back, I just didn't like it anymore.
And that's the experience that most people have, is you are wherever you grow up. And for me, that was England. You're terrified to leave because you can't imagine living anywhere else. And once you make that break, and then if you ever go back, you suddenly realize that you have grown so much as a person and the things that you want are different. And
Right.
often that state doesn't suit you anymore. So
Right.
that was my experience, and I've had the same experience when I couldn't have ever imagined leaving Georgia because we were there for 15 years. Once I made
Beautiful
that
there.
break, yeah, I love Georgia. When I made that break, it made every move afterwards so much easier. So where did you live in California?
We lived in Marietta, a small town just outside of Temecula. So we were there for 16 years, raised our children there. It was actually really nice being military and being able to stay in the same place the whole time. So my kids started school there and graduated from there, and beautiful town, loved it. It was small, it's growing a lot, and the traffic is just too much and everything else. So that's when we decided to.
And so what took you to Tennessee? Why did you decide on Tennessee next?
So in 2015, my husband had to come out to Tennessee for work for the military. And we decided to come out with him, and I just fell in love. Absolutely fell in love. The trees, the beauty of it. I remember driving down the freeway and I looked off to the side, and there must have been 20 to 30 deer, maybe more, just grazing on this hilltop. And I was like, this is heaven, literally. And the people are wonderful. They're welcoming. You break down on the side of the road, they're going to stop and help you. They wave as you're driving down the road. And so we just decided that in 2015, we knew we weren't going to stay in California. So in 2015, we decided maybe Tennessee. He's from Texas. We didn't want to go back to Texas. We have our reasons for that. So 3 years ago, he heard a commercial on the radio and they were auctioning off some land. So he calls me up and he's like, Pamela, what are you doing this weekend? I said, well, I have to work. He's like, nope, see if someone can cover you. We're going to Tennessee. And I'm like, what? Why? And we came here. Our daughter flew in from Arizona and met us, and we found a gated community just outside of Nashville. It's an hour away, that has, I don't even, 1,000 acres, maybe less. I don't know exactly how many acres are in here, but we fell in love with 5 acres in a gated community, and we're located at the end of the community up on a hill, and absolutely love it.
Wow.
You can hear the birds, we have deer, we have turkeys. So yeah, I love it.
Wow. Okay. So you have done a really good sell for me on Tennessee. I love it anyway, but as I was saying earlier, my whole goal is to inspire people to leave California and go and live an amazing life in a state that they love. So now you've given them the inspiration. Now you are going to give us practical advice on how you actually go about getting a mortgage and getting approved for loans and all of those things. I went to Bank of America years ago and bought a house, got a loan, bought a house from my brother-in-law. And that is my only experience of buying houses, which is why you never see me ever giving people advice on the YouTube channels or in the groups about, real estate, because that's not my specialty.
Right.
So
right.
If I came to you and I said, I want to buy a house in Tennessee, what is my first step to getting approved for a loan with you?
The first step is to fill out an application. That's the first step. I always like to talk to my clients and see where they're coming from, what they're looking for, kind of get to know them on a personal level. And they're just not numbers to us. It's a personal level that we try to achieve with all of our clients. And so the first thing is having that conversation with them, seeing how their credit is, their job history, kind of interview them in a sense. And then we have them fill out the application. We pull the credit report, and then we just go from there. It's a very easy process. We have an online application system, which takes 20 minutes or less. And then we go in and pull credit. And then I have a welcome letter that I send them. And I also email them a list of everything that we would need for the loan approval. And they can upload it into our secured system, and then we just start the loan process with them. So by doing this, collecting everything up front, it's an easy process once they find a home and we go into underwriting, because there's only 1 or 2 conditions that we may need from them. So we have done everything up front to where everything is perfect through the process. And that's what we try to achieve with all of our clients.
Okay. So for me, knowing nothing about the process, when you say documents, so give me an example of what kind of documents would you need me to provide for you to get to go through this application process?
Perfect. We ask for their W-2s for 2 years. Even though we may only need 1 year, we always ask for 2 years tax returns. If they have self-employment, they have a rental property, anything like that, we ask for the tax returns. Then we ask for 2 months bank statements. We ask for 30 days worth of pay stubs, driver's license, social security card. If they currently have a home that they are keeping, we will ask for a mortgage statement, property taxes, homeowners insurance. If they have a 401k, we'll ask for a current statement on their 401k. We'll ask for divorce decree, bankruptcy, if that applies to them. So it's a whole list of items that we collect up front. So we're not the lender that you call up and say, I want to apply for a home loan. Let's do the application. Let's pull your credit. Yes, you're approved. Go shopping for a house. Because 9 out of 10 times, something will happen that the bank wasn't aware of, and you'll fall out of escrow, or you have to extend, anything like that. So we always ask for everything up front. That way it makes, when I say you're approved to go purchase a home for $400,000, you're able to go do that with no setbacks.
Okay. So if I submitted all that information to you, would it matter that my pay stubs came from California, but I was looking to buy a house in Tennessee? How would that affect everything?
Great question, Allison. I get that answered a lot. And a lot of clients are having a hard time achieving that goal because the lender that they're working with or the bank doesn't really allow them to purchase a home being out of state and things like that. So if you're purchasing home out of state and you're keeping your job in California and you work remotely, the only thing we need from you is a letter stating that you can work remotely with the same pay that you're currently receiving and nothing's going to change. If you're looking to purchase a home and you don't have a job here yet, and you want to stay in California, but you go on vacations and you decide Tennessee is a great place to unwind and get away from the rat race and everything like that, we can do what's called a second home. And you don't have to own a home to do a second home, if that makes sense.
Yep.
So there's that option. Or if you're leaving your job in California and you have a job here in Tennessee, there's a couple different ways that we can do it. You have to have an offer letter stating that you're going to start on this date, and we can proceed with that income and approve you based on your offer letter that you have for Tennessee.
Okay, and so can I just go back to the buying a home as if it's a second mortgage? Talk me through that, how that process works, because I think I know, but I'm not. If you explain.
Yeah. So a second home is basically, it's not an investment property to where you're purchasing it and renting it out. You're buying a second home as a vacation home, and it's still a first mortgage. Does that make sense?
Okay, but so do I have to own a home in could I be a renter in California and buy it as a second home because I don't live in that state yet, and then presumably close out my life in California, move to Tennessee, move into my second home, and then once I'm there, once I have my job and all of those things, then does it matter? Would I have to then transfer it to a first mortgage, or would it just stay a second mortgage?
Great question. There's really no difference with the interest rate between a first and a second home. So I have clients that do that all the time, that they want to purchase a second home. They come out here for Christmas, vacation, hunting, fishing, all that fun stuff. And they decide, you know what? We're tired in California. We're ready to leave. We're going to sell our house and move to Tennessee and find jobs. They can totally do that. And it's not necessary for them to refinance the home here in Tennessee as a primary residence if they don't want to, because it may not be cost efficient for them to do it, and they can just keep it as a second home.
Okay. And am I right in thinking that if you do it as a second home, the only difference is you maybe do you have to have put down a bigger deposit on that than you would on your first home? Great
question. 10% down.
Okay.
10% down. You'll still have the mortgage insurance, but it is at least 10% down.
Okay. All right. So, okay. So that's great. You know, that gives people options. So what happens if I want to leave California? Presumably the most important thing is knowing what my budget is, looking at my, you know, whether I'm taking my income with me or whether I'm getting a new job, or most people know kind of what income bracket they fall into, whether they have a job or whether they're looking for a job.
Right.
How do I know? So say I earn, let's say 100,000 a year. How do I know how much house I can afford in Tennessee on 100,000 a year income? Is there like a calculation that tells you that?
So we just take the 100,000 divided by 12. And that's pretty much let's say they're salaried at $100,000 a year. We just take that and divide it by 12. And then their monthly income on a conventional loan, it's 50% of that monthly income.
Okay. All right.
On FHA, you can go a little bit above 50%, and same thing with VA. And then USDA is actually under 46% debt to income ratio.
Oh, okay. And I knew that the term. So the term is debt to income ratio. So the sum of my mortgage, I picked a bad number. I should have done 120,000, because then that gives you
That's okay.
a nice 10,000 a month. So
right.
say my income was 120,000, just because my brain's not very engaged.
Yeah.
Then I have $10,000 a month in income, and obviously taxes come out of that. But I can't have more than 50% of that 10,000 going on my mortgage, going on my credit cards, my truck, my alimony,
Student loans,
any of those things. So as long as I'm under
Mhm.
50% of my income to debt ratio, that is going to determine how much mortgage I can have. So people
Yes.
basically need to figure out what all their debts are that they pay each month,
Mhm.
what's left over up to that 50%, and then that's what they can afford on a mortgage.
Correct. So if it's 10,000 a month, 50%, 5,000. So their debt, student loans, credit cards, mortgage, taxes, insurance, all of that cannot go over 5,000 a month. But with FHA and VA, you can go above that.
Okay. My advice, I'm that person who likes to be house poor and cash rich. So the idea of 50% of my income going on my house, that's terrifying to me. But I'm that person who,
Right.
I want a cheap house because I want to spend my money on my lifestyle. So, and I know that
Right.
Tennessee has some very affordable properties. And when I do these videos, I'm always saying to people, you don't have to have an $800,000 house. You can have a very basic $200,000 house
Mhm.
and live an amazing life if you're in a different state. It's just a California mindset is different.
So I'll give you an example. In California, for the same purchase price that we did, our house payment with taxes, insurance, and everything, I want to say was like $2,586. For the same house that we have here, same price range, on 5 acres, we custom built it. Our payment is under $1,700 a month with taxes and insurance.
Wow.
So that just tells you the difference between like the property taxes and so forth in California.
All right. So we've dealt with, how you figure out how much mortgage you can afford. We've talked about how if you are, getting that second mortgage, if you're stuck in California, you don't have a job yet in Tennessee. What happens if someone has really bad credit? What is kind of like the lowest credit score that you can deal with? And how do you deal with bad credit?
So we have a system that the loan, the application has to go through to see if we have an approval for that. If we do receive an approval for it, then we can proceed. If they have a 540 FICO score, there's different ways that you can increase your credit score that we can go over with them. So I pull the credit. If they have bad credit, I totally help them and say, this is what we need to do. It may take this many months to increase your score. Here's some ideas to stick to. And I follow with them. I help them out. I'm not the one you walk into your bank and they say, oh, you have a 540 FICO score. We can't help you. Just come back when you increase your score. A lot of people don't know. They don't know how to increase their score. They don't know what to do. And there's things that you can do that can actually jeopardize increasing your score. So I totally explain to them, this is what we need to do. I highlight everything. I give them a plan, and then let's stay in touch every month. Let me know what your FICO score is, because there's a lot of apps that you can check your score on instead of us pulling it again, because there is some lenders out there that will pull your credit report every 30 days. And that is not necessary to do that. So once we pull it, we go through, I communicate with them, and then we proceed once they're ready.
Okay, wonderful.
One more question I forgot about. If it's something that we cannot help them with, we do refer them to Dedicated Credit, which is out of Marietta, California. And they've been wonderful. They've been in business for over 12, 13 years. And they will sit down with them and help them and go through with them. They don't sign a contract or anything. So if it takes 2 months, 3 months, they're done. So they're really good, and I trust them with all my clients to help them increase their score if it's a judgment or something that we cannot help them with.
Yeah, and in my experience, it is very, very possible to increase your score. You know, my husband had a very bad credit score because of various different situations when I met him, and it probably took maybe 18 months to 2 years to go from a bad score to, you know, a score that didn't affect him in any way. And I know 2 years for a lot of people sounds a lot, but if you are budgeting and you're saving and you're rebuilding your score and you're creating those systems where you don't get into a bad situation again, then when you move to your new state, whether it's Tennessee or wherever it is, you have the skills to be able to make an amazing life, and buy your dream home, or even if it's not your dream home, like your starter home in that state, so that you can work towards your dream home.
Right. Let me mention one more thing, because this just happened to a client of mine that kind of got, he went to somebody else, and it was an online. And one thing you want to do is when you call and talk to a lender, tell them your history. Explain to them what you're trying to do. You know, that's why I say I kind of interview them to see where they're at before I pull credit, because you shouldn't call up a lender and say, I want to purchase a house. Okay, let's pull your credit. And then you go over the application process and find out that they're not even going to qualify because of their job or income, or, you know what I mean? Something like that. So you always want to, when you talk to your lender, you always want to go over, you know, your history. And then that way, because you don't want lenders to approve, to keep pulling credit if you end up going to a few different people, lenders. So, you know, kind of explain everything to them, see where you're at, and then have your credit pulled.
Right.
That's my opinion.
And I would totally agree with you. It's like anything else. If you go online and put in some numbers and you immediately get a quote for anything, whether it's moving across country, whether it's a health insurance policy, whether it's a mortgage loan, if it's too easy, it's probably not binding. There's probably some catch. Just like, you know, if anything is too cheap, there are certain things that it's worth investing in. So
it happens all the time.
Yes.
It's sad. Yeah.
So that's always my advice. If you go online and you book a moving service and it's too quick and easy and too cheap, it's not worth it. It's the same with mortgages. It's the same with everything.
Yeah.
If someone, any other things you want to add before we get into how people can contact you?
So we specialize in, so I've been doing this for 17 years in California. And then 3 years ago, I decided that, hey, since someday Tennessee is going to be our place, I went ahead and did my license for out here. So I've been doing loans out here in Tennessee as well as still in California. We have no lender fees, and we also pay for the appraisal at the close of escrow. So that will save buyers tons of money when it comes to closing costs. So your closing costs are your title, all your title fees, your property taxes, your homeowner's insurance, and so forth. And we specialize in FHA, VA, conventional, and USDA. Yes.
Okay, perfect. Because there are so many fees and it gets so confusing. And so that's, you know, that is great to know. All right.
And also, Allison, one more thing is it's all about education when it comes to a loan. I remember when we did our first home loan, I was scared to death. And I'm not going to read 100 pages, you know, and it's scary when it's the biggest financial decision of your life, purchasing a home, and you don't know what anything is, the closing disclosure statement, the loan estimate, all that. So I think my purpose when I decided to do loans is to educate buyers on the most important items when it comes to receiving a loan. You know, it's your interest rate. You have to look at the closing costs. You have to look at the CD. See in box 1 what they're charging you. Those are where all the lender fees go. You know, so it's educating them so that they know what they're getting themselves into. Because back in 2006, 2007, when we had that dramatic change in the industry, you know, it was because buyers didn't know what they were getting themselves into. So I'm all about educating all my clients, and I tell them, don't hesitate to ask questions. There's no silly question when it comes to purchasing a home.
Wow. Yes, because it is the most important decision. And normally the stress of trying to go through that, have you chosen the right house? Have you chosen the right neighborhood? All of those things you're worrying about, when really you should be looking at the fine print and making sure that all your financial stuff is in place, because you're going to be paying on that mortgage for a very long time.
Exactly.
Well, wonderful. So you can help people who want to buy a house in California, and I think most people want to sell their houses in California.
I
know. And then you can help people who want to buy a house just in Tennessee. So you're just licensed in Tennessee?
Correct. California and Tennessee. I can help them with their home loan. We are looking to have our license in a couple other states. So that'll be a huge announcement, hopefully at the beginning of the year. We're actually in the process of doing that right now.
Wow, that's exciting. Well, wonderful. So if someone wants to contact you, what is the best way to contact you? And then I'll put all this information in the comments below. What's the best?
Okay. They can contact me on my cell phone, which is 858-518-1506. That's the best number. Or my email address, which is Pamela@firstlendingonline.com.
Perfect. And I'll put all those links in the comments. I'm sure you've inspired lots of people and educated them as well. I know I feel a lot smarter from talking to you. So,
well, thank you.
Thank you so much for everything that you shared with me.
You're welcome. Thank you for having me.